Aloha everyone, this is Danny Gould with the Gould team selling Silicon Valley. Welcome to another Silicon Valley market snapshot. This for the second week now here in June of 2019. I did take last week off completely, was in Hawaii. I'm back, refreshed, recharged, and looking at the maps, nothing's changed, and a lot of what I talked about in 2 weeks ago video, or in the previous video that I made 2 weeks ago, is coming to fruition. And so without further ado, let's look at the heat maps for this week. A lot of interesting trends are starting to come to fruition that I predicted a few weeks ago, but nevertheless, it's worth going over them for those of you that haven't been watching the videos consistently. It is now obviously the week of June 10th, and if you look around, you'll see that if you've been watching my videos for any given period of time, you'll notice that the numbers are starting to creep back up in terms of year-over-year inventory. And when we looked at April and May, a lot of these areas were in the double digits, and now we're seeing almost like triple digits in a lot of neighborhoods. And the biggest reason that is really we're just seeing a lot. This year, the inventory levels have just gone through the roof. And what happened was that in April, the acceleration of the market this year was not nearly as fast as it was last year. And so last year's numbers caught up, but we're still accelerating, and we're still heading into the summertime where inventory typically picks up. And so our acceleration now is mimicking almost, or overtaking in some parts, what it was at this time last year. And so it's very fascinating when you look at the pendings. Well, where are the pendings? Where are the pendings? Here we are. When you look at the pending listings, you'll see that in a lot of areas, we're in the red, which means that the excess inventory is not being absorbed, which is bad news for you if you're a seller. Good news for you, maybe, if you're a buyer, because there's definitely more to choose from. The competition is less savage, and everything is going much more normally, if you will, than it has in previous years. That being said, you know, if you look at maps from April and May, you'll remember that there were some pockets in the black, right? Some pockets where the excess inventory was being absorbed, and some pockets where the excess inventory was not being absorbed, right? And so if you recall, a lot of the areas where the inventory was being absorbed before has flipped, right? We've gone topsy-turvy in a lot of areas. And the areas that I mentioned in previous weeks were the top quartile of the market, or had a significantly more inventory in that top quartile price-wise, are now starting to pick back up. And so again, it's this constant concept of ebb and flow in the market. And sure, there might be some outliers, but overall, what you'll continue to see, as long as the market stays like this, where it's neutral, you're gonna see this balance and counterbalance effect in these primary and secondary markets, right? Places where people go, and then places where people flock to once this area has become too pricey or too competitive, if you will, or it becomes oversaturated again with buyers. And it's very typical. I mean, this is very common. This isn't the first year this has happened. We're just seeing it at a more pronounced scale now because there's more inventory, right? And so when there's more, right, when there's more data, things become clearer and clearer and clearer, right? So, by the way, I do have some absorption rates now for the month of May, which we haven't had before. And we actually have quite a bit of new information to share with you. But if you look here, absorption rate for May, this should be fascinating to a lot of you that have been watching the videos for a certain period of time, because everywhere here is in the double digits. We're almost seeing no triple digit absorption rates. And just so that you guys remember, absorption rate really measures the appetite of the market, right? Anything above 33% is considered a seller's market. We're getting dangerously close here in places like Saratoga and Los Gatos. which is interesting, right? Because you remember Saratoga had 15%. So we'll see how this number changes. 15% increase in pending listings. We'll see how this number changes next month, right? Because again, remember, this is May 2019. So you guys might start to get confused. I want to make this data as palatable as possible. And so sometimes you guys just might get a little confused, right? But this is May, right? And the other graph that we looked at for pending listings was for this week in June, right? So this data is a little laggy, right? But it does measure the entire month as a whole. So 41%, that's dangerously close to a neutral market. Doubt we'll see that again come July when we get the June absorption rates. Man, just 1 week off and I'm this rusty. Whew. I'm telling you guys, this is a skill, and if you're not building it, you're losing it, right? So now if we come over here to days on market, right? Oh, by the way, okay, so we have absorption rates for May of 2019, but let's go back to absorption rates in April, right? So the month before, you'll see, right? You'll see that the absorption rates in general are higher in most of these areas, right? And we got some outliers, right? But still, if you look at the overall map, you will see that the absorption rates on April's map are higher than the absorption rates on May's map. And same thing holds true, everyone, for the Northern Peninsula. This is the May absorption rate, right, for the northern part of Santa Clara County. And again, very healthy areas in Mountain View, Los Altos. Palo Alto is starting to go down, right? And if you compare that to where it was in April, right, it definitely has gone down, and so has Los Altos. Mountain View has come up, right? So good news there if you're a seller in Mountain View. If you sold in May, you made the right choice, right? But now Los Altos has gone down even further. Los Altos Hills, rather, has gone down even further to the point where we're literally 3 percentage points away from it being a buyer's market in Los Altos Hills. Why is that significant? Well, Los Altos Hills has always been, a little bit more of a niche market to begin with. But the reason that that's significant is because if we continue to see that behavior in other exterior top quartile luxury markets, a la Los Gatos, right, a la Saratoga, what you're going to see is that influence start to trickle down into other parts of the market, right? And of course, that's a gross generalization, but what happens in the high end eventually trickles down to the rest of us, right? The rest of us. So, fascinating stuff, right? Fascinating. But again, I want you guys to remember that all of this stuff right here, it's almost like we knew this was going to happen. Because if you watch the videos from even 3-4 weeks ago, this is exactly what I said was going to happen, because we know that in June and July and August, things tend to slow down. There is more inventory on the market typically, proof is in the pudding, and buyers tend to typically drop out of the market. Proof is in the pudding, pending listings are down in a lot of areas where they weren't down before, year over year, right? So when you start to see that the appetite is suppressing, right? The appetite is going down and inventory is going up. That is putting immense pressure on prices, and in a lot of areas, we're seeing price cuts, we're seeing things selling for less than they were this year, and I guarantee you, by the middle of the summer, end of the summer, you're gonna see a lot of media, a lot of news sites, a lot of Mercury News articles, San Francisco Chronicle articles, saying that prices are down, right? Not just that median prices are down, but that mean prices are down, average prices are down. You will see that article come probably, I would say, maybe around August, right? Which is really bad news for you if you're a seller, because honestly, September is typically around the time when things start to pick back up in the market here in Santa Clara County. But with news like that, who needs news at all when you got news like that? But what I'm trying to say is that everything takes a little bit of time for the media to, acknowledge it, regurgitate it, and then, pass it on to the layman. So I fully anticipate the numbers that we're seeing affecting the prices to the point where the media becomes aware, and then it starts feeding that information back to the public. So you heard it here first, right, folks? Now, what does that mean for you, though, right? Like, what does this mean for you if you're a seller and you are planning on selling in the next 6 months? Here's my take on it. Before, I would have said don't sell in June, don't sell in July, don't sell in August. But frankly, at this point, it has become immensely popular for sellers, other sellers in neighborhoods, to slash their prices to the point where it becomes appealing enough for the public for them to sell it instantaneously, instead of doing it the good old-fashioned way, selling it at, pricing it at market value, waiting 2-3 months, marketing it, really getting the kind of exposure that the property needs and deserves. But really, it's absolutely fascinating here in Silicon Valley. We become so programmed and so accustomed to getting what we want instantaneously that we have completely lost sight of the fact that in a typical market, things take 2 to 3 months to sell. And what we're experiencing as a direct result of that are prices going down faster than they should, because your neighbor, so to speak, is giving away your equity. Didn't that frustrate you? It would frustrate me, It would frustrate me if I was a seller in this market, for sure. And if I'm a buyer, I'm jumping for joy. And it really is the dawn, I believe, of a new era. And I'll talk about this more in another video. Well, I'm getting way off tangent, but I'll talk about this more in another video, where we're seeing a lot of these new startups, pop up with these instant offer type of deals, where they offer you a set price without any negotiations, anything, and it's typically less than you could get on the market, but it's instant, right? And so, man, I just think that that kind of model would prevail in this type of environment to a certain extent, right? Now, if you're out there trying to get the highest and best price for your home, right, for your property, then that model for sure is not the best model for you. You're selling your home at a discount, right? For ease and for shortened timeline, right? And time is obviously money. But I'm getting off on a tangent because, no need to regurgitate data that you already pretty much understand anyways. I really think that it's important to talk about the concept and the macro themes associated with the data that we're seeing at hand. And then also, just the macro themes that are associated with not just the data, but the psychology of the sellers and the buyers that are making this data a reality, right? Like, it's fascinating to me. I'd love to hear your thoughts on this, by the way. You can comment down below, shoot me an email, send me a text, what have you. But that's all I got for you this week, folks. Again, right, any comments, questions, concerns, go ahead and leave them down below. Email, call me, text me. And by the way, I've been getting some emails lately. I literally just found a few in my junk folder. Some of you have been replying and they get stuck in my junk folder. So if to avoid that, maybe try texting me instead, okay? 408-531-7654. That's my direct cell phone. You can find it online as well. I just think that for whatever reason, technology does not love me right now, and I'm getting a lot of your messages that are coming straight to my junk folder. And I do apologize if I did not get back to you in a decent amount of time. I just don't check my junk folder that often. So, but anyways, guys, this is Danny Gould with the Gould team, selling Silicon Valley, and we'll catch you guys in the next video.